How's it going, everyone? It is the investing guy, and well, this one was a tough one for me to make because I sold most of my dividend stocks. Throughout this video, I am going to tell you guys why I did that. I want to tell you guys exactly what it is that I'm doing with my stock portfolio. My stock portfolio looks completely different now. So let's get right into the video and let's talk about it. If we look at my portfolio, the first thing we can see here is that I do have 100 shares of Robinhood. But if we look down here, all of my stocks here, my dividend stocks that I had, well, now I just have fractions of it. Now, the reason why I did leave fractions, guys, is because eventually, deeper into this journey, I do plan on getting my shares back for all these stocks that I had. These were shares these were companies that I believed in. I mean, we'll see how they do in the future, but I am going to keep them here in my portfolio, just so that I know that eventually I am planning on getting these back. But as of now, that is not my main focus. Stocks are constantly moving up and down, up and down, up and down. And the way to make the most money with stocks here, just selling and buying, well, it would be to perfectly time these tops and time these bottoms and purchase, right? That's impossible to do, which obviously is going to slow your progress. Dividend stocks were working, but it was not as fast as I want them to be. I want the ability to retire as soon as possible. I do love being a teacher, but I want to have that security where I can say, I don't need this job. I'm doing it because I love it, not because I need to do it. And I do see this as a form for that to happen. So I definitely want to share with you guys my new plan. If we look here, guys, I am doing covered calls and I am doing cash secure puts. If you don't know what that means, go ahead and research them real fast and then come on back into the video and let's finish this. With dividend stocks, I did see a future, where I could retire. Currently, I am 28. At the pace that this was going, it was maybe going to happen when I was 40 or 41, 42 or something like that. I was already on my portfolio pretty much daily, and I was wondering, and with dividend stocks, there isn't much you can do. Pretty much you just buy whenever you can, and that's it. I am definitely more hands-on, and with being more hands-on onto your portfolio, there are more things that you can do, and so that's what I am going to show you guys. Okay, here we have a few different things, right? We have a few stocks that I have picked out for you guys, and that I actually did some trades on, and I'm going to go ahead and tell you guys what this all means, right? So pretty much this week, ARK Innovation ETF, I did have to put about $8,000 in collateral, but they paid me $230 in premium. So this is money that I was able to keep for myself. Thankfully, this trade went well. It did go south for a bit where I could have taken a hit, but thankfully ARK turned around, and when it was around $87 this week, I decided to close out my position and I was able to keep $230 out of the premium. The original premium was around around $290, so I did have to pay $60 to close that out, but I was able to keep $230 out of that. On a red week, $230 on a $20,000 portfolio. Yeah, that's going to be good returns, right? So now let's check out Robinhood here. So for Robinhood, I did do a put on Robinhood for $16.50 last week. That was closed out, so I was forced to purchase 100 shares of Robinhood for $16.50 each. They did pay me a $29 premium though, so I was able to keep this here. This week, I did do a covered call, which paid me $42. So pretty much what's happening here is these premiums are bringing down my initial price. Even though I did pay $1,650, out of my own money, I've only paid $1,579. And well, I am going to do a trade on Robinhood, so you guys are going to see how my cost basis is going to go down today. So make sure that you stick around for that. I'm going to do that in a bit. SoFi is another stock that I was trading, and I did get a $30 premium for the put that I already closed out. Lucid is another one that I really, really like. I got a $44 premium for a put, and then just recently today, I put another put, and I got a $77 premium. Pretty much what the goal is here is that you want to bring this down, the cost basis, you want to bring this down to pretty much, let's say, zero. Right? Or even positive with these shares. Once you do that to positive, you're literally playing with other people's money. And then the other big one here is that I was finally able to accomplish today was that I actually was able to purchase 100 shares of StarBucks. This was my first stock that I wanted to purchase. Because I do think that it's really beaten down right now, and for me, it's pretty much obvious that it's going to turn around. I went ahead and went all in on StarBucks, and I was able to purchase the 100 shares of StarBucks. And you see the initial price there, $10,427. I already did my first covered call for a $26 premium because it's very out of the money, and I'll tell you guys what that is. You'll see all that right now in a bit, but pretty much my cost basis is now down to $10,401. The one thing that really convinced me to pretty much shift my portfolio focus onto this, I'm a math teacher and I love looking at percentages, and what pretty much got me was that 9 out of 10 times, if you play this correctly, 9 out of 10 times you will come out winning. Why? Because 9 out of 10 calls that are out of the money, so calls that are in the money would be this one and this one. These would be in the money calls, okay? 9 out of 10 calls that are out of the money, so pretty much anything from here and down below, end up expiring worthless. What that means, if you're the seller, that's good. That is good because it means that you don't have to do anything and you get to keep all of the premium. So let's imagine that I purchased this covered call here. You'd end up profiting with $241. And that's what you want, right? When you are a seller, I do want this to expire worthless, right? Because I don't want to sell my Lucid stocks. If this expires worthless, I wouldn't have to sell my shares and I would pretty much profit with $241 that I get to pocket for myself. And when you're talking about percentage returns, that is a huge return, right, on your investment there. You're looking at more than 5% there. And like I said, 9 out of 10 out of the money, they end up expiring worthless, which is good for the seller. I do want to share with you guys my current trades that I'm doing. Pretty much my first one here is a Lucid put for $36. So if Lucid on Friday ends up at $36 or below, I will be forced to purchase 100 shares of Lucid. Right now it is currently at $40.63. So if it falls down below $36, then I'll be forced to purchase. I didn't just pick $36 as a random number. You don't want to just go in there and pick random numbers. You definitely want to check out at least like the support levels and whatnot. So let me show you really fast why I picked 36. So Lucid here seems to have a lot of support above $36, right? So I think that it's going to be very tough for Lucid to fall below 36. We do see that here at 36, there is some sort of resistance, as we see that there. Then we also see that it has resistance right there. And then right here, we see that it barely touched below 36, but it bounced right back up. So I think if Lucid does end up touching 36 again, hopefully it will bounce back up. But by looking at these charts, if it does touch 36, it'll go right back up, right? So hopefully that's what happens. But again, if I do end up purchasing my 100 shares of Lucid stock, I don't care. I don't really mind, because then what my plan would just be to sell a call on the money call, and I would collect a very nice premium, right? So either way, whatever happens, I do think that I would end up winning, right? So that's why I'm really not sweating it, and I'm quite comfortable with what's happening right now. My second trade is completely different, and this is Starbucks. Okay, like I said, I finally was able to purchase my 100 shares of Starbucks, and I do want to show you what's happening with Starbucks right now. Starbucks has been beaten down. If we look at it on the past week, right, it's just been beaten down, and it's the lowest it's been in a really long time, right? So the reason why this is happening is because of coffee inflation and whatnot. So a lot of people really scared about the coffee inflation that has gone up quite a bit. I do think that it's temporary though. So I'm going all in on the dip here for Starbucks, and I think it will be sooner than later, we'll see Starbucks in that $120 range. Again, I don't think Starbucks will go broke or anything like that, right? The option that I did for Starbucks was one that was really far out of the money. So for $108. Why? Because, well, I don't want to sell my Starbucks. Okay, I don't want my Starbucks to be taken away from me. Even if I were to sell it at $108, I would still come out profiting. So if it does happen, it's not a big deal. You know, I do think that it's very, very hard for this to happen. As you see here, 91.8% chance of me coming out winning on this trade. So very low chance of this happening. But the way that I'm seeing this, guys, let's go back over here, is $26, right? I want to be racking in, $26, $30 every single week and just be adding that up slowly. I will still be able to collect that dividend, right? 4 times a year. And on top of that, I will be kind of collecting these weekly dividends, right? I'm looking at them as weekly dividends from Starbucks. Very safe calls. If I have to sell them, I don't mind. It's okay, because I would have still made money, right? So I'm okay selling my 100 shares of Starbucks at a higher price. It's not the worst thing that can happen, because then I will just do a sell a put on the money put, and I would get quite a bit of money here, right? Premium. So whatever way, I still come out winning. One thing that I do recommend, guys, keep track of your investments, right? Definitely keep track. So one thing that I know, as of now, I can sell my Robinhood at $15.79 and I would still be profiting, right? Anything above $15.79 would be profiting. If we look at Robinhood right now, we're down. We're 15.15, right? So we're down a few, maybe like $80 or something like that. But I know that I can sell my covered calls at $16 and I would still be profiting, right? So let's check this out. So $16 is definitely the lowest I would go on my covered call. So I'm going to go ahead and trade some calls here. Remember, I am the one selling the call because, you know, by the way, the seller's the one collecting the premium. The buyer's the one paying the premium. So if you buy calls, just know that you're paying a premium, right? If you sell calls, you're collecting a premium. So you definitely want to be the collector. At least from what I've experienced in options, you know, I did get burned a lot of times doing these here. So paying the premium really does suck. Collecting the premium is very, very nice. So I do want to show you guys exactly the trade that I'm going to put here. For Robinhood here, I want you to pay attention at this price here. Right now it's $34 what I would get if I would do this on a weekly basis. Now if I go out on a 2-week basis, check that out. So 34, you actually get more, right? So I'm definitely going to run this one here. And I'm going to do that $80 one here, just a little bit out of the money. I did purchase it for $16.50, so if we do end up selling it for $16.50, will I profit? All the premiums are pretty much just profit, right? So I think that's quite a good trade for me. So let's go ahead and do that. Let's review this order. This will get fulfilled in the morning, so let's submit it. There we go, done. Okay, perfect. So now we're done. Now the next thing here is that we definitely want to come and put it onto our tracker here. So we're going to put 80 here. Okay, and then we're going to recalculate this. So 1579 minus 80. Well, now my cost basis is 14.99. I will have to wait 2 weeks out from now. But you know, in a market where things go up and down, why not collect money for shares? Either whether the stocks are going down or up. We do see that Robinhood is going down, right? But I am still collecting money. On the way down, remember, I purchased Robinhood when it was at $16.50, so somewhere over here. Wait, sorry. I purchased Robinhood when it was like at $16.50. I think it was like somewhere here. But ever since, I've been collecting money. No matter what's been going on, I've been collecting money. I don't have to predict the top or predict the bottom or anything like that. I just collect the money. And so this is why I like it so much, right? And I'm a little upset that I didn't know about this before, because I think if I would have known about this before, my stock portfolio would have been at a much better place. But anyways, whatever. We've got all the time in the world, right? Now I do want to talk to you guys about my long-term plan. These 4 over here, these are going to be my money generators, right? And these money generators are going to change with time, right? Right now they're money generating machines because they're very volatile, and volatility makes money. So these money-making machines are going to help me purchase my shares. You know, I'm going to be contributing every single week, but they are going to help me purchase shares of this. So eventually, my next goal right now is to eventually purchase 100 shares of Apple. And so just as Starbucks is paying me $26, is going to pay me $26 a week, around $26, I want you to see what Apple would pay me with a very safe option call. So again, something safe for me is anywhere around 85, anything above 85, right? This one here is quite safe. If you wanted to play it very safe, you would go to this one over here. But this one here seems safe enough. So imagine getting $45 from Apple, and this would be weekly, right? You could expect this weekly. And so again, these are just going to be compounding now and helping me purchase 100 shares of this next one here, right? Which would be Target. You can see where this is going to lead, right? I'm just going to make a guess here and say that Target might pay me $60 a week for a very safe call. Microsoft might pay me $70 a week for a very safe call. Costco is going to be the big one here. This is going to be, once I get this one, you know, I'm gonna be ready to retire, because if you know, Costco is like at around $500 and something. So Costco might pay me for a very safe call. They might pay something like $170 a week for a very safe call. And so you can see where this is going. Obviously, this is not going to happen within the next year, or, you know, maybe by hopefully by the end of this year, I have my 100 shares of Apple. We'll see how things go. But you know, this is going to take time to build. So the order might be Starbucks, Apple, then Visa, or Starbucks, Apple, then Nike. It just depends on the current valuation of what these have. But these are the stocks that I'm going to go with, right? And one last thing to remember is that all these companies here that I've chosen do pay dividends. So that's where I see extra safety. Not only am I going to be generating these weekly save covered call incomes, but I'm also going to be able to collect the dividends. And so now I'm making $26 every single week. If you add the compounding effect here, this can be great, right? And hopefully you understood once I explained my vision for this portfolio going forward. Hopefully you understand why I did what I did. I think being more hands-on into my portfolio, you know, I log into my portfolio daily and I try to do things daily. And so since I'm already doing that, I think might as well just add this extra step and generate some extra cash. That's the way that I see it. If you are trying to do this, you know, find a stock that you like and is trading for a lower price and see how it works for you. You don't have to go in and, you know, purchase a $10,000, you know, have to purchase a $100 stock. There are stocks out there that are $2, $3, $4, and see how it works for you. See if you like that weekly income strategy that this can generate for you. Again, I am going to try my best to update you guys weekly on this portfolio so you guys can see exactly what trades I'm doing and why I am doing those trades. So that is going to be something that I am going to try to do for you guys so that you guys can see hopefully how this portfolio starts building throughout time. This is going to take patience and hopefully this works well. You know, I want this to work well for me and I want it to work well for me, not only for me, but so that you guys can see how this might help generate more income. To a regular, you know, average portfolio like mine. It's only worth about $20,000, which is not a lot. Hopefully you guys found this video interesting. Hopefully you found this information informative. Like I like to say, let's go to the moon together and I'll catch you guys on the next one.